Hey everyone, and welcome to the PivotBoss Closing Report for February 22nd, 2016. I am Frank Ochoa with analysis for the current session here. What you see is the daily time frame of the ES right now. Price has continued to push higher off of our zone of support here, all the way back into our second of three targets. The first target we mentioned was the highest priority target at 1921. With a secondary at 39.5 and then the last target at 1950.5. The expectation was that any pullbacks into this zone be defended for a continuation into this area, and now several days later we've already reached that zone. A very high probability move off the bottom of this key range here. Failure to hold below 1804 suggested a return to 1939.5, and any acceptance beyond 1939.5 or the 50.5 zone would suggest a full-on push into the top of the key range here at 2075 and a retest of the HVN at 2078. So this is going to be important. This is a major fulcrum in the charts right now, where bears are expected to defend up here for a return to support. That's kind of been what the market's been doing lately. It's been trading in lots of ranges and then seeing expansion from those ranges and then creating another range. So you see trading range environment here, then a move down, trading range up, trading range down, trading range. So far we've seen a lot of that play out. We forecasted a lot of it as well. And that's what could be at play here. It's not quite ripe for a reversal opportunity yet. I would say continue to watch the recent highs here, continue to watch 50.5. A push above that level and any failure to hold it would suggest a push much lower, likely all the way back to recent lows. And again, if we're going to see a push through it, then any close beyond 1950.5 starts to position you for a move into the upside targets. Now let's take a look at the intraday time frame here for the ES. Looking at the intraday chart, you can see right here, basically price trading a lot of the range in overnight trading here, and then from after RTH and on, it was just basically pretty flat and quiet. And right now, this is basically the fuel here. There's a lot of participants that are in this move now, and a break either way could spark a major move, one direction or the other. So failure to hold above 1933s here would suggest a return to 5-day value at 1922, followed by a continuation back toward 1912 and perhaps back into the Fed number of 1903.75. Now holding above this zone would open up a continuation into 1950.5, which is our expected idea for a continuation into 50.5 with a shot perhaps even seeing a move into 64.75, the previous month's high. There's enough fuel here to get it to that next level, and then from there any failure or rejection we'll be able to identify what's happening from there. But right now, the short-term breakout from here sparks the next phase of expansion. Take a look at the daily chart of crude here. This one's been trending downward, and you can see a clear markdown phase. Pullbacks to the trigger zone of the PIMAs here have been selling opportunities each time, and this time we've kind of just been stuck here. We haven't really gone much of anywhere here. We have a new rollover on contracts here, but we do have kind of a tightly coiled range on at least a 3-day basis. This range is below 65% of average range, and if you expand it out, it could be even better. So right now, that tells you that this thing is coiled, and we're going to be watching the previous week's high, 34.21. A push above that level opens up a move into 36.71 and 37.81. Any failure or rejection of acceptance above this price zone here would suggest a retest of 31.02 with a shot at seeing a push to new lows. We've been in a downtrending price discovery phase here, so pulling back like this, any failure to hold this 31.32, 31 evens, opens up a clear path to new lows ahead. Let's take a look at the intraday time frame. Here's crude oil in the intraday time frame. Again, it's looking a little heavy right now. We have a very clear trading range that's played out here, and you can see how price gets to one end and then starts to see an accumulation phase and then mark up to the top. We've seen it do the same thing down here, accumulation phase, mark on to the top. Now it's seeing what could be a distribution phase ahead of the push and auction down toward lows. So right now, short term, if price can't hold above this intraday LVN from the session here, which is about 33.20s, the expectation would be for a push into previous 5-day VPOC here at about 31.70. So getting that number right on the dot is about 31.72. Failure to hold that 33.20 opens up a path right to that level. So it'd be very similar to what happened before, where price is trying to go up, can't, breaks and drops right into previous value here. Same thing could happen in overnight trading heading into the upcoming session, so watch that area closely. All right, taking a look at gold. Gold has gotten a significant squeeze, obviously, after we saw this saucer or rounded bottom formation develop. A push through the top of our key level here, had targets all the way up into the 250% expansion target, and then price came back down and set the edge on both sides. So now we have a key range here we're watching on the intraday to see how price plays out of this range. I mentioned before, after a 300% of ADR day on a single session, the highest such session since December 1st, 2014, that's huge. So when that happens, you got to blow off top here, and price drops and drops and drops until it can't go down anymore and pops back up. Now you have an impulse key range where you start to see either a reaccumulation phase or, more likely, a distribution phase up here. And that's kind of what's been playing out here. We've seen this thing kind of continue to build out, so watch for further development. Failure to hold above this 1196.5 opens up a clear path back to previous composite VPOC, now in HVN at 1126.10. Let's take a look here at the NQ now. The NQ in a daily time frame shows prices have been trending steadily lower. However, we got the rejection of prices below 38.93.5, the August low. Once that happened, I mentioned a push into 42.26 is the likely move ahead, with a shot at seeing a continuation into 45.58 by the first week of April. And so far, we've seen a big time push. We're halfway there in just a week later. So we've seen that move materialize very, very quickly. And now we're seeing some weakness enter the market at that zone. And that's to be expected. Now we're not at any rejection point just yet. We could even climb into 43.09s, which is the recent resistance. But we're starting to get into that point here where we're starting to see a little bit of weakness. And once we see it, we'll know it. And it could be an opportunity to bring this thing back toward recent support. Otherwise, a push above 42.26 and a hold would suggest a continuation into these upward targets here, marked by the key range. So a lot to look forward to here as we test the midpoint of the August range at 42.26. Looking at the NQ here in a lower time frame, very similar to the ES. We saw a lot of the move happen in overnight trading all the way up. Then we see price go sideways here. Now prices are holding very, very quietly in this range, and it could be basically overexposed to the upside. And if this thing is overdone to the upside, any failure to hold, basically 4,200, would suggest a rotation back toward 5-day VPOC at about 41.61, with a shot to see a move to the bottom of value, 41.33.5. So that's going to be important there. Holding above 41.96, 4,200. So bulls want to defend that LVN for a shot at seeing a continuation higher. And if that materializes to the upside, we could see a move into the upside expansion targets all the way into 43.11.5. But right now, got to watch 4,200 because any failure to hold that brings price right back to 5-day VPOC. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.